Hey guys, Taylor with GammaEdge here coming at you with another educational piece. Today we're going to be talking about the GEX ratio. So getting into that, have you ever found yourself watching a stock rise day after day, only to suddenly see it reverse course with no apparent warning? Or perhaps you've hesitated to enter what looked like a strong uptrend only to miss a major move because you weren't confident in the staying power? The challenge most traders face isn't seeing what's happening right now, it's anticipating what happens next. Traditional tools like price patterns and technical indicators only tell you where the market has been, not where it's headed. What if there's a way to which you could see sentiment shifts before they appear on a price chart? This is exactly what the GEX ratio provides. This simple yet powerful tool measures the balance between call and put activity and the options market, giving you a window into how market participants are positioned themselves. And more importantly, it often signals major sentiment shifts days or weeks before price confirms the move. In this lesson, you'll discover how to use the GEX ratio to identify potential market turning points before they happen, confirm whether a real price trend has momentum behind it, spot warning signals that others miss, and how to filter your watch list for the most promising opportunities. So let's dive in and unlock this essential market sentiment tool. So the GEX ratio, this is a straightforward market sentiment indicator that measures the balance of options positioning, and the calculation is straightforward. To get that, you divide total call gamma in the options complex by total put gamma in the options complex. Yes, it is that simple. This single measurement tells you whether calls, upside speculation, or puts, downside speculation, are dominant in the market structure. So a GEX ratio greater than 1, that suggests, that indicates that call gamma dominates relative to put gamma, which is a bullish sentiment. Less than 1, puts are dominant. Greater than 1, there is parity. So an important pro tip for you here is that individual stocks typically maintain GEX ratios greater than 1, since retail traders naturally prefer upside speculation and single names or individual equities. Think Apple, Tesla, Nvidia, etc. Because of this, what's most valuable in tracking is tracking both the absolute value of the GEX ratio as well as the trend of the GEX ratio. So if the ratio is rising, that means that call speculation is increasing and or put speculation is decreasing, which suggestive of kind of more bullish activity. Then vice versa, if the ratio is falling, that means call speculation is leaving, put speculation is entering, which is generally weakening conditions. So in terms of why the GEX ratio matters to your trading, the GEX ratio solves a fundamental problem with sentiment, with traditional sentiment indicators like the standard put call ratio, and that is that the GEX ratio incorporates the critical element of time. So consider this scenario. A trader buys 40,000 put contracts expiring a year from now. This immediately skews the traditional put call ratio towards bearish sentiment, right? But does this position really impact today's markets? Not meaningfully. By using gamma rather than just simply volume, the GEX ratio naturally emphasizes what matters most. That is near-term options, which have higher gamma, right? Because gamma is most prevalent at the money and closest to expiration. So, right, the GEX ratio naturally favors or places more influence on those trades that are happening in the near-term structure, which, right, for us traders matters most. Then, right, those distant trades, those year out to year out, have relatively low gamma, and those have minimal influence on the GEX ratio. And this time-weighted approach delivers 3 key benefits for us. First is acts as an early warning sign, as well as seen in the examples below. The GEX ratio often shifts before price does, helping us identify market turns before they happen. Real-time sentiment, it naturally weighs current market sentiment more heavily than distant positioning. And then it also helps with trend validation. Watching the ratio's direction helps confirm whether a price move has real momentum behind it or not. So now getting into how to read and apply the GEX ratio. So right, to leverage the GEX ratio effectively, here's the 4-step approach. Check the current reading relative to 1. Again, above 1, bullish, below 1, bearish. But remember, again, pay attention to the trend of the GEX ratio as well, not just the absolute number. Next, get into that, more in depth, compare to the stock's normal range. Right, so each instrument has its own typical range. SPX, Apple, Nvidia, Tesla, they're all going to have different highs and lows of kind of what's normal within their GEX ratio. right? So, some stocks may typically range between 1.5 and 2.5. Others could be 0.8 and 1.2. What's most important is understanding where the current reading sits in that kind of context of the specific time series that you're looking at. Again, here hitting on trend direction. The ratio's movement also tells you more than the absolute value. So when it's rising, bullish sentiment. When it's falling, bearish sentiment. So right, bullish sentiment, even if below 1, if it's still moving higher, that is still constructive, and vice versa, bearish sentiment, even if it's above 1. Then again, watch for leading signals, as the GEX ratio frequently leads price momentum. Declining ratio, while price continues rising, often warns of upcoming weakness. Then an improving ratio when price is falling may suggest a potential bottoming is coming. So right, if you think about if the market's bottoming but call speculation or put speculation is entering or leaving respectively, that could be a constructive signal. Right, and then lastly, use the GEX ratio as a confirmation tool for trading bias. For bullish trades, look for a rising ratio above 1. For bearish trades, look for a falling ratio below 0. And then for cautionary signals, watch for divergences between the price and ratio trends. So now let's get into 2 practical examples. Here is Apple, then we'll go through NVIDIA. So going through Apple, right, just kind of highlighting what we see here. By the way, this is the GEX ratio output. $GR is how you run this in the Discord. So here, early December 2024, we have a strong uptrend. Then we have a sharp deterioration, and between December and January 2025. And you can actually notice here how the GEX ratio makes a high before price does, and GEX ratio is leading price lower. Again, that's one of the benefits of the GEX ratios. We can see that deterioration happening in the structure before it reflects in price. And right, other key things, the top of the range is 4.5, bottom of the range is just under 1. We can see, as of March 9th, when this was produced, we were bottoming around the bottom of the range. And so, what that simply means is if you're really bearish on the stock, when it's already at the bottom of the range and sentiment is kind of washed out, not necessarily the greatest time to continue pressing your shorts there, because you're kind of shorting in the hole, so to speak, at that point. But this also tells you, right, that it's certainly not a spot to get bullish because there's really no call speculation entering the name, right? The ratio is lower, barely off its lows. You really want to start seeing this drive higher, and that call speculation start to come back into the name. Right, and just going through here, what's particularly interesting is how closely price follows the structural shifts, the January to December deterioration, December to January deterioration, as well as February, and GEX ratio preceded the significant price weakness. Again, we hit on, how the GEX ratio up here made a high before price did. Then we can see again in early February, we tried to make this rally attempt, but the GEX ratio, right, declined and then price followed. So again, this is a very helpful tool to help you not get too far out of your skis. And then lastly, the pro tip here, we did hit on, understanding kind of in the context, the range where we are at, the highs 4.5, lows below 1, kind of overbought sentiment up here, oversold sentiment below, down here. Next example, is NVIDIA. So here we're looking at here from February to May 2025. So here, a couple of key signs. Obviously, we had the strong rally in February. We made a GEX ratio high, but then, when spot price made a high, GEX ratio did not make that same high. Again, kind of like that Apple example. That's kind of an early warning sign. Then we could see, the GEX ratio really precede that movement lower into February and March. Then, right, we get that choppy, action in the GEX ratio, choppy action in spot price. We never really see a continuation higher in the GEX ratio per se. You got a little bit of a rally in the GEX ratio, but again, we saw that deterioration making the lows, right? And then we start to see the bottoming happen. In here, we're starting to see a drive, a progression higher. We're back into the middle of the GEX ratio range here. So right from this point, bulls, you want to see a continuation higher up to the highs of the GEX ratio. And then, caution signs you want to see is if the GEX ratio starts to deteriorate before or with price action deteriorating as well. The other important thing to know is, just note the range of the GEX ratio here, that topped out at 2.2, bottoming out at 0.6 versus Apple above, I think it was like 4.8 to the upside. So again, this just kind of shows how each individual stock kind of has its own characteristics in terms of the GEX ratio. So after those 2 examples, you should kind of have a concrete idea of how you can visualize the GEX ratio and use it for kind of understanding the sentiment in the stock, and if it's, suggestive of, kind of increasing bullish sentiment or, increasing bearish sentiment. So now let's get into kind of how you can incorporate this tool into your trading process. So in your pre-market routine, check the GEX ratio of the major indices as a key gauge for overall market sentiment. Are these ratios trending higher or lower, for SPX, QQQ, IWM. Next, use the GEX ratio to monitor against, key stocks across your watch list. This can kind of help you understand sector-wide sentiment shifts based off the stocks that you do follow. And then it helps with early warning sign detection, right? When you do this on a daily basis, you start to notice when those divergences between price and GEX ratio occur. And just want to highlight here, the GEX ratio is a key part of our market turning framework. The market turning framework is essentially, right, just our pre-market routine for understanding trend, structure, and sentiment in the market. Again, it's our daily process to understand when those divergences and those three key pillars do occur, or if the market is still status quo. So if you go to our curated playlist in the YouTube description, we have a specific video on that. Or if you're going to read the article, we're going to have that linked here. So not only can it help you with kind of your pre-market routine, but in terms of refining your trade timing, for long entries, you want to be prioritizing those GEX ratios that are not only above 1, but are trending higher, right? Looking for those ratios that are merging from a bottom. It could be starting a new move higher. Doesn't necessarily have to be above 1. Those are kind of more risky entries, but right, those are better risk to reward entries. And then paying attention to the acceleration and the ratios improvement, which often leads to, stronger price action. If you're in a long, something to be cognizant of when you're looking at this day over day is being alert when the ratio begins to flatten. Kind of tells you that call speculation is, starting to wane a little bit in the name. Potentially locking in partial profits when you see this ratio start to weaken, and then watching carefully for divergences between the ratio and price, meaning is price moving higher and the ratio starting to decline. Then for short considerations or for sitting in cash, stocks where the ratio is actively declining, seeing an acceleration lower in the ratio, and then right, that would be confirmed with price breaking key levels to the downside. So if you've been following us for any amount of time, you'd like to know that we like to use a mosaic approach where we combine multiple tools together. It's never just one tool, one factor that we rely on. So specific to the GEX ratio, this pairs nicely with two specific tools, one being our delta balance tool. So, while the GEX ratio shows overall sentiment, your delta balance shows you specifically what's happening above and below spot price. So when combining these tools together, it kind of gives you the what and the where of market sentiment. We actually did a deep dive on pairing GEX ratio and the delta balance. Again, you can find the article here in our curated playlist and description. We have a video on that as well. Also with the market trend model, right? When the GEX ratio reveals sentiment, we want to see that confirmation via momentum. That's exactly what the market trend model does. And when both are aligned in the same direction, thinking SPX as an example, that GEX ratio moving higher, market trend model moving higher, that is a good sign in terms of overall market health. And then, right, in terms of the market trend model, if you're not familiar with that, we have a dedicated article, again, another curated video in our playlist as well for you there. A couple common pitfalls to avoid using the GEX ratio, ignoring stock-specific baselines, right? And that just simply goes back to not understanding the highs and the lows and the range of the GEX ratio. Again, reacting to absolute values instead of understanding the trend, using the GEX ratio in isolation and expecting instant results. Right, and as we've hit on already too, we need to make this a part of your daily routine. The reason for that is so it's easier to understand when those changes in trend are occurring. And then lastly, wrapping up with final thoughts, the GEX ratio offers a unique window in a market sentiment that traditional indicators simply can't provide. By measuring the balance between call and put gamma, it reveals not just a current sentiment, but where sentiment is headed, often before price confirms the move. More specifically, through this article, through this lesson, you've unlocked the ability to see market structure shifts before they appear on a price chart. Think the Apple and NVIDIA examples that we went through. Identify potential reversals by spotting divergences between the ratio and price. How to filter your watch list for the most promising opportunities. And then how to combine this tool with other key tools in the GammaEdge framework for higher conviction trades and just an overall read on market sentiment. Remember, the magic is in tracking both the value and the trend. By making the GEX ratio part of your daily routine, you'll trade with greater confidence and clarity, position yourself on the right side of market sentiment, rather than fighting against it. So if you're ready to start incorporating this, start tomorrow. This can be used as early as tomorrow by checking the ratios of the major indices and a few key stocks in your watch list. Pay attention to their trends over time and how those trends relate to price movement. With practice, you'll develop an intuitive feel for how this powerful tool can enhance your trading decisions. With that, appreciate the time. Any questions, you can leave them in the comments, ask us in Discord, etc., and we will be happy to reply to those. So with that, have a great rest of your day. Thanks. Bye.